All right, guys. So this is basically going to be a part two of kind of like an introduction to the stock market. Like I said, guys, basically I own my own company, Gore Financial Group. We make investments simple, so hopefully I can make it pretty simple to for you all today. So kind of just like a recap of like what happened last time in the training session. So we kind of learned like what is the stock market. And then the stock market is basically just an open exchange where investors have the ability to buy shares or ownership in a publicly traded company. Kind of like whenever I say open exchange, it's money or cash for equity in a company. That's kind of how the stock market works. Whenever you invest something, you're putting money into a company, and then they give you that share or that, in other words, equity in that company. So that's how that works. And then also kind of like to note something else, whenever a company has a high demand, the share price is going to go up, right? Just same thing like whenever gas prices went up, everybody was needing gas. It's because the demand is high. But let's say that the demand was low for gas and the price of gas is going to lower. So it's kind of like a tug and like kind of like a tug of war type of thing, right? Between supply and demand. And then the next thing, another main point was the type of investors that are actually in the stock market, right? So we have the retail investors like you and me, right? Just the retail investors. And then we have the international companies. Like I was saying last session, basically, all these big companies are invested in other companies. They have equity in other companies. Obviously, probably not the same market, but in different markets. For example, like a bank would invest in maybe like an oil or energy company, something like that, right? And then we actually have like the financial institutions. So like your banks, your hedge funds, just places where people put a lot of cash to make their dollar turn into $2, right? And then we have the type of market analysis. So this is kind of like where I'm going to like branch off to today in today's session. There's fundamental analysis, which is more of like the news and everything like that. And then there's technical analysis, right? So fundamental analysis is going to basically be your news, and your technical analysis is going to kind of be like your charts, right? So basically technical analysis is whenever you use like a historic stock price to kind of like influence the decisions in like the present day market, right? So for example, for the people on TikTok, I know you probably can't see that. So that top line there is $176, right? $176. That's Apple. And as you can tell, it's hit the $176 four times and it's never broken, right? And that's been for the basically like ever since the beginning of the year. It's never broken 176, right? 176. So basically, 176 is a great price to sell off at because we've seen it hit there before and it's never broken. So, that third or that fourth time, we know that, it's a good chance of it going down, right? But for example, the bottom there, right? That's 130, right? It came down and it's hit 130 and it did not break 130. Now, this is only back, dated back into January, but 130 has been a big price for Apple stock, right? Like it's never broken 130 for a couple times now. So that would be a good place to buy. So kind of going off of that, right? So going back to that, the top line there, let me get you all right. Sorry about that. So for example, that top line there, right? That top line is actually going to be called a resistance because it's resisting price from going up. And as you can tell, a resistance is a high point in the market where price often stops and rejects downward, and it acts as a ceiling. So, as you can tell, price comes up, comes up, comes up. It acts as a ceiling, and it continues to push down. So it's acting as a ceiling. So on the other hand, the complete opposite of that is a support. Basically, it's a low point in the market where price often stops and it reverses upward, right? So kind of like what I was just saying. So at 176, that would be a good place to sell because it's rejected there multiple times, right? And the 130, that would be a great place to buy. So similar with the supports and resistances, a resistance is going to be a good place to sell because it's going to stop there and it's going to push down and it's going to act like a ceiling. And a support would be a great place to buy because it's going to push down, stop, and then push back upward, right? So this bottom line that I have here is very important. So resistances and supports are denoted by multiple touches of price without a breakthrough of the level. So like I said, 176, it's hit multiple times and it's never broken, right? So that we can tell that that's a resistance in the market. Now, like I was saying, it's only touched the support there for Apple 130. Like I said, it's a strong report support, but I wasn't able to get in this picture. So just know, trust me there. 130 is a pretty big support for Apple stock as well. And then it needs to have two rejections. So same thing there. 176 it's hit there 4 different times, and then the 130 it's hit multiple times in the past, but you get the point. So now we're kind of like seeing the more difficult side of not the more difficult side, but I guess you could say like the more difficult to like understand part of trading stocks, especially the technical side, is candlesticks. So basically, candlesticks actually represent how the market is moving. And it also kind of indirectly shows the amount of buyers and sellers in the market at a certain amount of time, right? So, there we go. So this is basically this is one of the most important things that you like are going to see. Your
So right
most
here,
important
guys, my
visuals.
computer froze and I had to cut out about 2 minutes of the actual training session.
Yeah. So like I was kind of saying, we have the bullish and the bearish candlesticks. Basically, with the buying candlesticks, you're gonna have a higher, basically, yeah, my bad, man. Um, you're gonna have a higher closing, and then with a selling candlestick, you're gonna have a lower closing, right? That's just kind of like the easy fundamentals of it. All right. So there's going to be buying candlesticks and there's going to be selling candlesticks. So I'm just going to give you like a couple quick instances. The only ones that, okay, so if you're a beginner, don't try to like memorize all of them because you're going to get a headache and it's going to be too much for you. I'm going to be honest. So if I were you, I would just pay attention to the hammer right here. And then I would pay attention to the just went over here, I would pay attention to the shooting star. Pay attention to those because I'm gonna actually like show you like some real life examples if that makes sense. I don't know why there's such a glare. Sorry guys. I'll just keep it right here for the rest of the time. It's fine. So yeah, for example, like I said, whenever you're practicing in the market as a beginner, try to find a hammer candlestick and then try to find a shooting star. So I'm gonna give like just a short explanation of these. So like I said, so with the buying candlesticks, you're going to be finding these at supports, right? So you're going to be finding these at supports. So whenever the market is kind of like at the bottom, right? And then if we went to the shooting star, these are going to be selling candlesticks. You're going to be finding these at resistances, right? So like I said, a hammer is going to be a buying and a shooting star is going to be a selling. So if you kind of look here, the reason why this is a buying candlestick is because it opens right here. Basically, it drops all the way down, creating that really big wick. So you can tell that there's a lot of sellers trying to push price down, and then it ends up closing a little bit higher, right? So even if it was like a selling candlestick technically, or like a red candlestick, price was still driven down by sellers and buyers push price back up to finish here, right? So like I said, basically buyers are trying to push price down and push it all the way back up, right? Even there, right here, sellers push price down and then buyers, same thing. So with the selling, it's kind of like the complete opposite. So basically, buyers are pushing price up, and then sellers are pushing price down, driving price down, and that just shows there's a lot of sellers in the market. So with that being said, I'm going to show you all a couple of examples, especially big examples. So if you all been following me for a while, you all would know that basically at the beginning of the year, I was saying that the stock market's going to fall extremely hard. And there was one reason why I really thought that, right? So another thing I kind of like failed to mention, um, as you all can tell up here, there's going to be the 1 minute, the 15 minute, the 1 hour, 4 hour, the 1 day, the 1 month, and then you can do a lot more than that, right? So these are considered time frames, right? So whenever we click on one of these, that shows how much the candlestick is actually worth or how much time that's actually worth. So we're on W right now. That stands for 1 week. So every candlestick shows a week of trading, right? Shows a week of trading. We went down to the 1 day. It shows a day of trading. The 4 hour, 4 hours of trading. 1 hour, 1 hour of trading. Just, so on like that. So another thing. So whenever you get to the higher time frames, the more of an impact, show on price, obviously, because a a 1 minute candlestick is not going to have the same effect as a 1 week candlestick because that's 1 minute of trading compared to 1 week of trading, and money flows extremely fast in the stock market, right? However, if we come over here, this is the Dow Jones Index. Basically, um, it kind of shows like it's an overview of the stock market. It's a stock market index. It contains like 30 of the biggest companies in the world. So whenever you hear about Amazon or like not even Amazon, so you hear about like Microsoft, Home Depot, Apple, Walmart, those type of companies, um, you know, it kind of follows that, right? It's an average of all those companies. All right. All right. Yeah, we're good. So one thing to kind of like look at, right? So this is like kind of where we were towards the beginning of the year. And look at this one right here, right? So if I zoom in on this, and this is on the 1 week. So like I said, it's gonna have like a greater effect, right? So this right here is a shooting star, right? So like I said, you're gonna see these at resistances in the market. So if we zoom out a lot, actually, you're going to see that this was actually a high point in the market. That's why I have a higher high right there, kind of noted as a higher high, because I knew that, we were reaching a peak in the market, and then we saw a shooting star, right, which is a selling candlestick. So I was like, okay, first of all, if we kind of exit out of here and we go to like, let's say like a 4 hour, like a smaller time frame, right? Let's see. When we zoom out, remember how it was like it needs to be touched multiple times? Well, it got touched multiple different times, right? And as you can tell, like it tried to break multiple times. Like even right here, it did break, but it broke like extremely hard back down. It tested it again, and then it could not break. And then that's where we kind of are today. Like that's why we're seeing so much like bearish price in the market. So yeah, even if we go to the 1 week again, when we zoom in, we'll see some shooting stars as well. At this low point right here. So actually, guys, like this box right here is called price reversal zone. Kind of just think of it as like a big support in the market, but as a zone, right? Instead of a line or like a specific price. It's like uh just know like it's a very strong price zone where like price usually reverses. So if we start looking over here, so we see price falls down, it creates a hammer, pushes back up. Then we see right here, it creates like three hammers back to back to back, right? And then we see price push back up, right? Even right here, we see another hammer. So like I was saying, it's price reversal zone, pushes down, buyers push price all the way back up. And then as you can tell, we see another like shooting star right here, push back down, shooting star right here, push back down, right? So one thing that I would recommend as a beginner trader definitely is to look at the bigger time frame. So go to like the 1 week, 1 day, and try to find shooting stars and the hammers in the market and try to see like what like how price reacted, right? So like look at both of these. A hammer is the buying candlestick. You'll see these at supports, and then the selling candlestick is the shooting star, right? So let me see if I can. Earlier today, whenever I sent that trade, I believe that I also sent something. So someone asked, start with hammers and shooting stars. Yes, I will stick with that. Just because there's a lot more in the market than the hammers and shooting stars. Like those are the most basic ones, just the hammers, the shooting star, and they're the most frequent, I believe. So yeah, just look for hammers and shooting stars on the higher time frames, and then After you see that, then try to like go to the lower time frames and try to find an entry point for like a buy and a sell. But yeah, definitely. So guys, I'm gonna like kind of like show you all today because the trade that I sent today literally was shooting a hammer, by the way. I might have to move it over a little bit because, but yeah. So earlier today, obviously, guys, at like 3 o'clock in the morning, I basically saw that price was kind of like moving sideways like this, and I knew that price was going to end up falling again, right? So if I actually like zoom out just a little bit, right? So this candlestick right here, this is a hammer. This is literally a hammer. So what I'm teaching you right now is something that I use personally, and I use it every single day. There's not a single day that I don't trade the market and I don't look
Just
for
as a
like
little side
candlestick
note, guys,
patterns
this
like
trade
the
was
hammer and
still
the shooting
running in the
star.
chat while the trading session was going on, and it ended up hitting all of the TPs. So make sure to actually pay a lot of attention to the hammers and the shooting stars that I talk about in this video.
It's just a great, um, it's just a great like, it just shows. How can I say this? It shows that the buyer is. It shows that a lot of momentum is pushing one away. Let me say that. It shows that a lot of momentum is pushing one away. So like I was saying, basically with the hammer, the sellers are pushing that price extremely low, but the buyers are coming right back in and they're pushing it right back up, right? So it just shows that there's a very big price reversal. Um, I was going to kind of say like same thing, kind of like with a tweezer top, but don't get too stuck up on that. So what is momentum? Let me just say it doesn't have like anything kind of like it's just like a word that I use. So momentum kind of like in the stock market is a lot of buyers pushing against the sellers, right? Because they're pushing them back. Think of it as like I said, almost like a tug of war in a way, but just a lot of buyers on one side versus the sellers. So they're pulling the rope a lot harder, right? Or they're driving price in their direction, upward really hard. So that's what I kind of mean by momentum is like there's a lot of buyers or sellers pushing it one way. Now, whenever there's like no momentum in like, kind of a sense, it's whenever price is moving kind of like sideways like this. There's not too much especially so for example, right here you can tell that there's a lot of momentum with the buyers, right? But here you can tell that they're kind of like starting to fight each other, um, almost as like prices even, right? And then if you kind of look at the bottom here, these actually kind of represent the amount of buyers and sellers in the market. Um, yes, thank you for pointing that out for me. Whenever that's actually called consolidation. Whenever price is moving sideways. So whenever a price is moving sideways, don't jump in because you might jump the gun, just wait for like a price act, like some type of a candlestick pattern like that. And then that will, be your deciding factor almost. If it's moving sideways, it can go either or. It's kind of like flipping a coin, like 50-50 type of thing. So yeah, definitely do not trade whenever it's moving sideways.
Thanks for watching, guys. Make sure to click the link tree in my description. There you'll find the invite to the Stock Society Discord. You'll find the website to Core Financial Group for courses and mentorships, and you'll be able to find our Instagram page.